How's it going, everyone? This video is going to be a little bit different with more of you to get ideas of what dividend stocks you may want to consider in the year 2022. Now, there are 69 holdings in this portfolio, and for efficiency, I won't get too deep. We'll have a deep dive video later in the future, but I'll read it off ticker symbol, maybe some kind of background, high level information you may want to know if it's not too popular of a company, and then the actual company name itself. So, with that, let's get into it. Starting off, we got AbbVie, ticker symbol ABBV, more in your pharmaceutical type of industry. Definitely a DGI, dividend growth investing, hot kind of stock in the community, and a very famous one at that as well. You got ticker symbol ACN, Accenture PLC, a consulting firm which deals with management consulting, strategic type of efforts, and technical slash IT consulting as well. Next, you got ADP, more of your work role, payroll type of how automatic data processing, that's the company's name, and how your paycheck may get direct deposited or not, kind of a company that manages that type of function within a company. Next up, we got AFL, Aflac Incorporated. If you've seen the duck in those insurance commercials, you've probably heard of Aflac. Then you got ALB, Albemarle Corporation. Always mispronounce that one. So ALB is going to be another DGI competitor paying a dividend with a hot streak behind it. Then you got Air Products and Chemicals. So APD, very, very popular stock here in the DGI community. So something you may want to consider, has a long stretch of paying that dividend and growing it consistently as well. You got ticker symbol ASML for ASML Holding, supremely popular in the energy sector. And if you look at the graph, I wish I could show it to you right now. It's to the moon over the long term in terms of exponential type of increase. The dividend yield starts off low, but in the long term, seeing dividend growth and kind of the stock appreciation, definitely something you may want to consider. Then you got AVGO ticker symbol for Broadcom Incorporated. If you know Broadcom more on cable, but not exactly cable, more in the telecom space overall. Then you got AWK for American Waterworks, essentially American Waterworks, and the next one up on the list, AWR. So AWR, AWK, these couple together, they're American Waterworks for AWK, and AWR is American States Water Co. So these two are going to be more related to your utility sectors, of course, and more with the water supply in general for America at a very high level. But in terms of dividend growth and in terms of the stability of that dividend, what you can expect, the growth may not be to the moon, but definitely you can see more of a stable cash flow of sorts from these two. And next up, you got one of my favorite companies, not exactly purely in the dividend growth realm, but in general, day to day, you got AXP for American Express. And from there, you got Brookfield Infrastructure, so ticker symbol BIP. And if you're familiar with BAM, ticker symbol BAM for Brookfield Asset Management. Brookfield is associated with BIP over here as well. And you got BKH for Black Hills Corporation. You got Cost for Costco. Hopefully, Costco needs no explanation. You got Cisco Systems, some more on your technology side. You have CubeSmart, ticker symbol Cube. So Cube has its friend EXR, extra space storage, as well as one more storage firm in this space, which is basically for these long-term, short-term type of rentals when you're moving between places or long-term storage. Mostly, you can see them in the cities really when folks are moving around, and they're really just competitors. But when you look at the financials, things are a little different, so worth taking a look if you want to get deeper into that industry. And from there, we got CVS. CVS, hopefully no explanation there. Next up, we got DLR, Digital Realty Trust. If you've seen those server rooms in TVs, movies, or otherwise, this stock, DLR, this company really houses those type of server rooms in general. So definitely one of those with, the way technology is for storing certain types of data, it's not going anywhere today at least, or changing rapidly, but it could differ in the future. But for now and for the time being, in terms of tech, digital, actual physical space for these servers, DLR is the one that we have. Then you got DPZ for Domino's Pizza. So Domino's, it's on a tear if you look at its graph. But in terms of dividend, it exists, and more than that, the growth for the company exists there as well. And similar to our water companies, we have next up ED for Consolidated Edison. So ticker symbol ED is more on the electric side versus water. Then you got EPD for Enterprise Products. So EPD is one of those high dividend payers, At the same time, it comes down to the company structure. It's structured as an MLP, a master limited partnership, versus potentially what generally may exist for normal class shares, for example, with your Apples of the world or Microsoft of the world. But when it comes to the way this company is structured, it's a little bit different. Then, as we mentioned, EXR, similar to Cube. Then you have GD, General Dynamics, supremely popular, kind of more of an older company in the good way in terms of a dividend payer. Maybe not the best for growth in terms of the appreciation of the stock price, but definitely a dividend. You can rely on it coming through. You got next up HBAN, Huntington Bank Shares. So worth looking into. Again, more on the financial side, but definitely worth looking into. Home Depot, HD, hopefully no explanation. Next up, you got IBM. And next up from there, you got ICE, ticker symbol ICE. So not the ICE, more on the government side, but actually ICE, where Intercontinental Exchange. And if you actually look into their history and see how the New York Stock Exchange and ICE are related, it's a fun fact right there. But definitely, it surprised me and shocked me, and I was definitely more in line with owning ICE. And we'll get there soon enough to another stock known as ticker symbol NDAC, aka the NASDAQ itself, not to be confused with QQQ, the ETF, but NASDAQ as a whole. So ICE, New York Stock Exchange, NASDAQ in terms of the actual platform slash software, definitely something that has some value there. Next up, we got INTC for Intel, followed by JEPI, which is the JP Morgan Equity Premium Fund itself, which is going to deal more with selling covered calls against the positions in that ETF, resulting in you getting actual monthly income, aka monthly dividends, versus your traditional quarterly dividends or otherwise. And from there, you got J&J for Johnson and Johnson, followed by JPM, JP Morgan. Then you got Key Corp, ticker symbol Key, followed by Coca-Cola, then MasterCard. You got McDonald's. You got MGM Growth Properties, ticker symbol MGP specifically. And then you got MMP, so similar to EPD, and MLP, Master Limited Partnership, but MMP here stands for Magellan Midstream Partners. Then you got MO for Altria. MO is going to be your Marlboro, if you've definitely heard of them. And you have British Tobacco, which is not on this list, but it exists, and they own American Spirits, for example. So Marlboro versus American Spirit versus then you have Philip Morris as well. So in this specific portfolio, there's only MO, and this discussion can be for another day of why there's specifically Altria and maybe not the others. Then you got NDAC, as we mentioned, so NASDAQ Incorporated, and followed by NEE, Nextra Energy. Definitely worth looking into, very popular stock here. You got NLY up next, a very famous REIT, real estate investment trust stock, where your dividend yield in the midst of 2020 when everything was looking not so hot, you have yields of 16%, 20%, that range that you could lock it in for the long term. But at the time of this recording, you're still talking about 10% in terms of actual yield, and you can own it for the long term and kind of see the graph and see that you'll be getting income. And all the growth may not be there, it definitely pays in terms of an income fund if you're trying to live off of income from your portfolio or have a higher yield in general overall. And next up, quite the contrary, you got Noble, ticker symbol NOBL. So here you have the dividend aristocrats. And if you're watching this video and this far in, you probably know the difference between aristocrats and dividend kings. Comment down below, happy to make a separate video altogether for that. But that being said, this ETF basically has those type of aristocrats in there. And with that, if you look at the graph in terms of dividend, you definitely have the growth in the long term, or at least that stability of the actual dividends being paid out. And at the same time, you also have growth, but it just depends time to time as there's some big corporations in there. And so growth may not be like tech, but dividend reliability will definitely be there. Next up, we got O for Realty Income Corp. O is one of the REITs, the most popular REITs, and they pay monthly here, and they have a great track record, and we're talking more than 10 years plus. You have OKE for One Oak Incorporated, and OZK, Bank of the Ozarks. So OZK doesn't tell you that it's a Bank of the Ozarks, but that's what it is. So another bank, it's a bit smaller. It's not like your big main banks, of course, and if you haven't heard of it, it's very reasonable. And at the same time, if you have heard of it, then you may know what it's about or how big it truly and really is. But their financials look up and up, and the company's been killing it of recent. Then you have PG for Procter and Gamble. Hopefully, no explanation there. When I got to know they own Pringles, I was definitely shocked. Then you got PRU in the more insurance space. So Prudential is going to be similar to Unum Group or Unum Group, and we'll talk about them shortly. So more in the insurance space, they track well this stock and the other stock we'll go over. But essentially, if you want to get your exposure into that insurance space with more of that reliable income in terms of the consumers themselves, hopefully that cash flow coming in and you getting that according dividends slash payments from there. Then from there, you got the QQQ, Invesco's QQQ Trust. So essentially, the NASDAQ 100, the top 100 stocks in the NASDAQ in that tech sector. So with that, this ETF, my expectation is basically a lot of growth in the long term, not just in 2022, but beyond. And in terms of dividend, it may start off a bit lesser, but definitely because of that growth, it's one of those parts of this portfolio that increases the portfolio value as a whole as needed to rebalance maybe down the line, but also provide higher dividend growth in terms of the absolute amount as this dividend increases in the long term. And from there, you got RTX for Raytheon Technologies, and then Starbucks, ticker symbol SBUCks, SNA for Snap On Incorporated, not to be confused with Snapchat, beautiful stock here. Southern Company, ticker symbol SO, and you got the S&P 500, the SPY itself. From there, you got another REIT, Store Capital Corp. This is one of the most popular REITs, I would say, in terms of after O, Realty Income, and after a couple others, but it's top there, especially with other YouTubers in the dividend growth investing space. Then you got Skyworks Solutions, popular company. They work with Apple heavily in terms of actual products and actual hardware pieces that are in the iPhone itself and other cloud type of operations. Lower dividend yield for sure, but the growth could be there. Definitely not a lot of reliance on Apple itself in terms of the business, and if Apple could maybe take over Skyworks in terms of what they're actually doing and not keep those contracts up day to day, maybe things could change, but just a heads up there. And so Cisco Corp from there, SYY. If you've seen Cisco, the cafeterias, whether they're in corporate places or certain schools, depending where you went to, basically Sodexo, if that rings a bell. Essentially, those folks where you have Sodexo and pre-made, not necessarily food, but more of the logistics of getting from point A to point B in terms of those ingredients that are maybe cooked at a certain cafeteria and otherwise. You have TD, Toronto Dominion Bank, and really quick before we move on, SYY, given the nature of the business, it's not a huge grower in terms of the actual appreciation, but it's definitely important. And during the Rona, it was quite vital, almost like a utility, but more in that food space. And if you see the track record for its dividend, it's quite phenomenal. So, if to my memory, it's almost going to hit 50 years upcoming here soon, or it has already. And so from there, Cisco, Toronto Dominion, you got Truist Financial Corporation, ticker symbol TFC. So BB&T and SunTrust, BB&T bought SunTrust, and then with their merger, basically became Truist Financial. Then you have Target, you have T. Rowe Price, Tyson Foods, Texas Instruments, Unum Group, UPS, Visa, Vici Properties, so more of the Caesars and that side of the properties of your MGM Grand and certain properties on the Vegas Strip. So looking into Vici and looking into the potential of MGM itself and Vici coming together, or MGP specifically, basically there was a push for them to actually merge as one. And if you look at the actual case of what happened in the end and how it went on, you definitely can see, is it worth owning both or owning one, kind of structure and how you want. I have it as both, as I see Vici separate, and that's a discussion for a different time. You got Walgreens Boots Alliance, WBA, got Walmart, and you got Wynn Resorts and DGI-esque. The name of the portfolio is DGI-esque. So this is the one that used to pay a dividend, then it stopped during the Rona, and now we're back where it's not yet, but similar with Disney that, hey, you could start any given time. So with that, here's 69 ideas to consider in 2022 for dividend growth investing stocks. Thanks for coming to the end.